What if I told you that every time you trade a currency pair, you're actually participating in a story that started thousands of years ago? I'm serious. Not on a trading app, not on Wall Street, but with shells, gold, wars, and empires collapsing overnight. So sit tight, because by the end of this video, you'll never look at EURUSD or GBPJPY the same way again. All right, let's rewind. Long before charts, candlesticks, or brokers existed, humans traded using barter. You had goats, I had grain. Simple until it wasn't. What if I didn't want your goats? What if my grain spoiled before I found someone to trade with? That problem is where money was born. At first, people used items everyone agreed had value: salt, cowrie shells, gold, silver. And here's the key thing. Money wasn't about paper or coins, it was about trust. Fast forward a bit. Empires rise, kings rule, and currencies become symbols of power. The Roman denarius, the British pound, literally backed by pounds of silver, gold coins stamped with the face of whoever was in charge. If your empire was strong, your currency was strong. If your empire fell, your currency collapsed with it. Now here's where it gets interesting. As empires began trading with each other, something new happened. People started asking one question.
These rates must
how much
reflect
of
the journey's
your money
risks.
is
Agreed,
worth
but
my
the current
money?
metals demand
And
higher.
boom,
A fair compromise
that's
then,
the seed
for all.
of currency pairs. At first, it wasn't formal. Merchants negotiated exchange rates on the spot. One gold coin here, two silver coins there. Rates changed depending on supply, demand, and political stability, even back then. Sound familiar? Now let's jump to the 1800s. This was the era of the gold standard. Most major currencies were pegged directly to gold, meaning one British pound equaled a fixed amount of gold. Same for the US dollar, same for others. So exchanging currencies was basically exchanging gold values. This system brought stability, but it had a flaw, a big one. If a country ran out of gold, its economy froze. Then came wars, expensive wars. World War I shook everything. Countries printed money to fund war efforts way beyond their gold reserves. And just like that, the gold standard started cracking. After World War II, the world tried to fix the mess. In 1944, representatives from 44 countries met in a small town called Bretton Woods. This meeting changed finance forever. They agreed on a new system. The US dollar would be backed by gold, every other major currency would be backed by the US dollar. In simple terms, the dollar became the boss. So if you were exchanging currencies, you weren't just trading money anymore, you were trading economic strength. America's economy versus yours. This is where modern currency pairs truly started forming. USD became the anchor. That's why even today, most major pairs revolve around it. EURUSD, GBPUSD, USD/JPY. The dollar sits in the pair like the sun. Everything orbits it. But then, another plot twist. In 1971, the US did something wild. They abandoned the gold standard completely. No more gold backing, just trust. Pure fiat currency. At that exact moment, currencies were no longer fixed to anything physical. They floated. And when currencies float, they move. A lot. This is the birth of modern Forex trading. Instead of governments locking exchange rates, the market decided. Traders, banks, corporations, speculators. Supply and demand now controlled currency value. And because every currency needed a reference point, they were quoted in pairs. You can't trade a currency alone. It must be compared to something else. That's why Forex is always a pair. When you see EURUSD, you're not buying euro alone, you're buying the euro against the dollar. You're saying, I believe Europe's economy will outperform America's. That's it. Now let's talk about why specific pairs exist. Major pairs came first. These involved the strongest, most stable economies with massive global trade. The US dollar, the euro, the British pound, the Japanese yen, the Swiss franc. These countries traded heavily with each other, so their currencies needed constant exchange. That's how we got pairs like GBP-USD or USD-JPY. Then came cross pairs. Traders got tired of converting everything through the dollar, so instead of Euro through USD through JPY, they went straight to Euro-JPY. Same logic, less steps, more efficiency. Then came exotic pairs, currencies from developing economies paired with majors, USD-NGN, USD-ZAR, USD-TRY. These reflect trade relationships, capital flow, and economic dependency. High risk, high volatility, high reward. Now here's something most people never think about. Why is Euro-USD quoted that way and not USD-Euro? It's not random. Some currencies historically dominated trade. Others followed. The euro inherited its position from legacy European currencies. The pound, one of the oldest currencies still in use. These historical power dynamics still shape Forex today. Even the order of a pair tells a story. The base currency is what you're buying. The quote currency is what you're paying with. So when Euro-USD goes up, it means the euro is getting stronger, or the dollar is getting weaker, or both. Now let's bring this full circle. Forex currency pairs are not just symbols on a screen, they are living reflections of history. Wars, trade routes, political decisions, interest rates, economic confidence. Every spike on a chart represents millions of human decisions happening at once. A central bank announcement in Tokyo, inflation data from the US, political uncertainty in Europe, oil prices affecting Canada, all of it priced into a pair. And here's the beautiful part. When you trade Forex, you're not just guessing direction, you're interpreting a story. Which economy is growing faster? Which central bank is more aggressive? Which country inspires more confidence right now? That's why currency pairs exist, because money at its core is comparative. Strong versus weak, stable versus risky, growth versus decline. So the next time you open a chart, pause for a second. You're not just looking at price movement, you're watching history, psychology, and economics colliding in real time. And that is the true origin of currency pairs in Forex. If this video helped you see FX differently, you already know what to do. Like it, share it, and stick around because we're just getting started.